Hi, I'm Kep Kepner CPA here in Dallas. I've talked about how you identify the quality of a business by the kinds of questions the business owner asks about their business. If you haven't seen that, you might want to look for my instruction on those questions. Let's take, for example, the question of your profitability. It's a really poor question to ask you, well, what's your profit this year? Of course you care about that. That designates the amount of take-home pay you may get. It affects the amount of taxes you owe, but that's a very limited question. What I advise our clients to do is to concentrate on the gross profit of their business. So gross profit is sales minus the direct cost to create those sales. So if you buy a widget for $1 and you sell it for $2, you have a gross profit of $1. And that's 50% of your sales. So that's a really good gross profit. In a service business, like mine as a CPA and others, a high gross profit is something that you would expect to find. If you're in a manufacturing business or if you're in the construction business, you would expect a lower gross profit and the lower gross profit percentage as well. So it's important to ask questions, not what's your bottom line, but what's your gross profit. And then the next question you ask is, okay, really what costs should we include? I was talking with a client yesterday that is a construction company. They do heating and air conditioning for apartment projects. So they have a lot of commercial business. They also have a residential business. As we talked about it, I said, well, what do you expect to make on your commercial construction jobs? And they said, well, about 55%. And I said, well, what about your residential? And they said, well, about 10%. If you had enough commercial work, why would you ever do work in the residential arena and make only 10% before you got to any of your overhead? Well, you might if it was necessary to keep your workforce working and a variety of other reasons relating to cash flow. But if you don't ask the right question, you never get to that answer. So the question in their case was not only should we be examining our sales and our cost of sales by revenue stream or by product line, and what should we really include in cost of sales? Because they're a construction company, in the first 8 months of this last year, they spent $67,000 on gasoline. Now think about that. You and I have our cars and we may go out and spend, $50 a month or $100 a month on gas, $67,000 in 8 months. So that means they're taking their trucks from the warehouse, they're driving to job sites, doing work, driving to the suppliers to pick up materials, driving to a different supplier, going to the office of the customer, then driving back to the warehouse. $67,000 worth of fuel in 8 months. So the question is, should that really be included in the cost of sales or in the overhead? As a practical matter, it should be included in the cost of sales. So maybe you're not making as great a gross profit as you think you are when you start bringing in all the costs. This is about the quality of questions that you ask about your financial statement and your financial resources. If you don't ask the good questions, then you're not going to get the good answers. The answers that can help you grow your business and improve your profitability and, quite frankly, improve your life. It comes from asking the right questions. So if you need somebody to ask you those questions, remember us, because we will always tell you the truth. Thanks.